George Soros lost $2 billion in 1 year. How was George Soros defeated by China in his short selling of the Chinese yuan in 2015? Does George Soros's shorting law still work? How can ordinary traders avoid the failures akin to those of George Soros? Hi my friends, welcome to ZC's Finance channel. This is the 8th episode of ZC's 5-minute financial series. And today, we're focusing on a high-stakes Forex showdown. George Soros's 2015 attempt to short the Chinese yuan. After outmaneuvering the British pound and Thai baht, real or Soros thought the yuan, amid China's 2015 economic shifts, would be another winnable bet. But China's unique policy tools and market resilience left his quantum fund with unmet profits, and a lesson in underestimating a major economy's financial defenses. Let's break down every step, from his initial positioning to China's counter-moves. First, let's set the scene. 2015. China stood at an economic crossroads. After decades of rapid growth, the country was shifting to a more balanced model, with GDP growth slowing to 6.9%, its first dip below 7% in 25 years. Then came the August 11 exchange rate reform. The People's Bank of China adjusted the yuan's central parity mechanism to align with market supply, triggering a 1.9% one-day depreciation. This move, paired with the U.S. Federal Reserve's looming interest rate hikes, gave Soros an opening. He publicly claimed the yuan had downward pressure and told his team, "This is a chance to repeat our past wins. The yuan can't hold." Phase 1. The speculative setup. October 2015. 5. Soros didn't rush in, but he built his position with the same playbook that worked in 1992 and 1997. Here's what he did. 1. Offshore short positions. Since China's onshore yuan was tightly regulated, Soros focused on the offshore market, where the currency traded more freely. Quantum Fund used derivatives like non-deliverable forwards to build a short position worth an estimated $10 billion, betting the yuan would depreciate by 10–15%. 2. Ignoring policy resilience. His team fixated on China's growth slowdown and the post-reform yuan dip, ignoring critical strengths. China's 3.8 trillion foreign exchange reserves and its ability to implement targeted capital controls. Soros brushed off warnings. Reserves only delay the inevitable. Market trends win. 3. Sentiment amplification. Through media interviews, Soros amplified bearish sentiment, claiming China faced a hard landing. This pushed small investors to follow his lead, with offshore yuan falling 3% against the dollar by September 2015, seemingly validating his bet. Phase 2. China's defense, policy as a shield. November 2015 January 2016. Soros expected the yuan to collapse within months, but China launched a multi-pronged counterattack that broke his strategy. 1. FX reserve intervention. The China sold over 500 billion of its foreign reserves to buy yuan in the offshore market. This boosted demand for the yuan, reversing its decline. By December 2015, offshore yuan stabilized at 6.5 against the dollar, wiping out most of Soros's short-term gains. 2. Capital control tightening. China strengthened checks on cross-border money flows. It restricted overseas investments by Chinese firms, tightened verification for individual forex purchases, 50-0-year limit remained, but with stricter rules, and raised the cost of borrowing yuan in the offshore market. This cut off Soros's exit route. He couldn't easily convert profits back to dollars. 3. Confidence-building signals. Top China officials publicly stated the yuan had no basis for long-term depreciation and emphasized China's commitment to stability. These messages calmed market panic, reducing the herd effect that fueled Soros's past wins. Phase 3. The fizzle. Soros exits. February-March 2016. By early 2016, it was clear the bet had failed. Here's what unfolded. 1. Stabilization and losses. The offshore yuan stopped depreciating, and the cost of holding NDF short positions ate into Quantum Fund's returns. Reports never fully confirmed by the fund suggested Soros's yuan-related positions lost $2 billion. 2. Quiet retreat. Soros didn't double down. He quietly closed most of his yuan short positions by March 2016. In a later interview, he admitted, "China's ability to manage its currency surprised me. I underestimated their policy coordination." 3. Market aftermath. The yuan remained stable for the rest of 2016, and China's foreign reserves bottomed out at 3 trillion, still enough to defend the currency. Smaller hedge funds that followed Soros faced even bigger losses, with some shutting down. Phase 4. The aftermath. Soros' painful lessons. For China, the 2015 showdown reinforced its ability to defend financial stability. For Soros, it was a humbling reminder of his limits. He summed up his mistakes in 3 key truths. 1. Policy power trumps market trends in major economies. Unlike the UK, 1992, or Thailand, 1997, China had the reserves and regulatory tools to override short-term market pressure, breaking his speculate and profit formula. 2. Onshore-offshore markets aren't separate. China's ability to intervene in the offshore market showed it could bridge regulated and free markets, a dynamic Soros didn't anticipate. 3. Emerging markets aren't all the same. He treated China like a smaller emerging economy, ignoring its size, reserves, and policy autonomy. Overgeneralizing past wins led to poor judgment. Lessons for modern investors. Don't underestimate a major economy's policy tools, especially foreign reserves and capital controls. Avoid following big names blindly in regulated markets like China. And always account for a country's unique economic structure, not just global trends. Why does this matter in 2025? Today, as countries like India and Brazil push their currencies toward global use, the 2015 yuan case remains a blueprint. Strong governments with policy leverage can defend their currencies, even against top speculators. In 2025, with global currency volatility rising due to U.S. tariff debates and regional conflicts, Soros' 2015 mistake is a critical reminder: one-size-fits-all speculation doesn't work. If you love this deep dive into Soros' unexpected setback, hit like and subscribe. Next episode, we're turning to a different kind of clash: the timeline, key events, and impacts of George Soros' feud with Donald Trump. We'll cover their first public disagreements, how politics intertwined with finance, and what their rivalry means for 2025 global markets. Subscribe now. You won't want to miss this look at the intersection of power and money. Thank you.